Yes, what's up guys? Welcome back to the channel. Today I want to dive into the differences between mechanical trading and discretionary trading and which one is the best. So after today, you will know the benefits of mechanical trading, the benefits of discretionary trading, and you will know what the best style for you is. So everyone has a different personality and your personality has to match with your trading style. And after today, you know exactly which style is going to fit you the best. So let's first take a look at the benefits of mechanical trading and then go further. So what are the benefits of mechanical trading? First of all, it gives you a testable idea. So for example, as you can see on the screen, this is an equity curve from a strategy of me in the NASDAQ targeting 5R, including trading costs, and it's really good. This is what you can do when you're trading a mechanical system. You can do an objective backtest, you can measure past performance, you can see how it performed in the past. And if you test something that didn't perform well in the past, why would you trade it live? So essentially it's a sort of a safety mechanism to prevent you from trading stuff that doesn't really work in real time. And that's a huge benefit of mechanical trading that you're not going to get if you trade discretionary. Next to that, it gives you clear rules, and those clear rules are testable, but also easy to execute because it's clear rules, it's black and white, there is no gray area. You can also automate those things so you can get an algorithm and it really makes your execution even easier. It also helps you with this, and this is, I think, highly overlooked when it comes to mechanical trading, and it's going to be developing a probability-based mindset. Trading is probabilities. If you have a 50% win rate, it doesn't mean you're going to win 5 out of 10 trades. It means you're going to win 500 out of 1,000 trades. Using mechanical trading, you can really develop that probability-based mindset. Why? Because if you do a backtest over a period of 10 years, you will see the losing streaks, you will see the winning streaks, you will see the average results, the best case scenario, the worst case scenario, etc. And you will have it all on paper. And what that does is the average is going to tell you, okay, this makes, I don't know, 10% a year. But you can also then zoom in and be like, oh, hold on, 2 months of losing streak, 3 months of losing streak, but we still made the 10% return. And that's really going to help you to keep perspective when you're trading live. And it really teaches you that losing periods are okay. And it teaches you that you cannot win every time. Drawdowns are part of the game. And it really helps you with the mindset kind of thing. And that's what most people struggle with, honestly. So they struggle with the mindset to stick to their plan when they are losing. And this really can help you with that. So those are the biggest benefits from mechanical trading. There are some more. But when we take a look at the benefits of discretionary trading, there's also a few things. First of all, it gives you room for discretion, which can, for some people, lead to increase in performance. And what I mean by that is that sometimes when you're trading a mechanical system, you have to follow the rules. But sometimes you will just know beforehand, it's just a feeling based on experience, I call it, that the odds are probably not that high on that one single trade. If you trade mechanically and it's programmed or whatever, you're going to take that trade with the same amount of risk. If you trade discretionary, you're going to be like, I'm not going to take this trade. For some people, using their experience in discretionary trading can improve their performance, and you're missing out if you trade a fully mechanical system. You can also do both things. So you develop a mechanical system and leave a little room to bend the rules. This might increase performance for some people. Another benefit of discretionary trading is give you more room for different trading concepts. So there are certain concepts that you basically cannot put into an algorithm or that you can make fully objective. So when you trade mechanically or use algorithms, it's going to be very difficult to make those things, and therefore you cannot trade using those concepts in that particular way, which you can if you trade discretionary. So those are basically two of the biggest benefits with discretionary trading. Now, if we compare the benefits, this is what you're going to see. Mechanical trading gives you the opportunity for objective backtesting, which means you can figure out in advance if the things that you want to use actually worked in the past. It's easy to execute because you can automate stuff. but you can also have a clear written down plan with exact rules that you can execute on easily because there's no gray areas. Automation possible, like I said, and it's easier to get into the probability mindset. And if you take a look at discretionary trading, possible improved performance and more choice in trading concepts. Those are like the benefits in the comparison. But then if you take a look at the negative sides, mechanical trading, rigid rules, no rule bending if you stick to mechanical trading. A big issue when it comes to mechanical trading and system development in general is going to be, I'm going to move myself, is going to be the over optimization. A lot of people, when they are developing systems, mechanical systems, they get into the backtesting. And backtesting is amazing, but then they dive too deep into it. They data mine, they find the exact best settings that worked in the past, over optimize so that it doesn't work in real time. And that's a very big issue a lot of mechanical traders have. It's just overfitting and not doing out of sample testing when out of sample testing is needed, not optimizing things correctly, etc. That's a very big downside of mechanical trading. If you are going to use mechanical trading, I would highly suggest studying backtesting, studying optimization. What can you do? What can't you do? And really think about it. The next thing is that it goes a lot of time into the development of an actual strategy. You got your initial idea, formulation of idea, getting the right historical data, doing the initial testing, doing robustness testing, doing cross market validation testing, testing different time frames, optimization, demo trading for a while, then live trading, etc. So it takes a long time to develop a mechanical system. That's it might be a downside for some people. Excuse me. If we then take a look at discretionary trading, the downside there is that you discover the edge only in live trading. So you put money on the line and you don't know if there's any edge because you can't objectively backtest discretionary trading. You can put in some mechanical elements into your discretionary trading which you can test, but you can never do a full objective backtest with a discretionary edge or a discretionary strategy. That's a big downside. The next thing is you don't have any drawdown perspective. So when you do a full backtest of something, you can know the maximum drawdown, the longest drawdown the strategy had in the past. Doesn't mean it's going to be exactly the same in the future, but you have a reference point. If you know your strategy had a 40-hour drawdown in the past, you can then base your risk around it. You don't freak out if you have a 10-hour drawdown. And that's also what you cannot get with discretionary trading. And the next thing is gray areas, which for some people make it hard to execute. So if I then combine all these things, there are basically a few conclusions when it comes to mechanical trading or discretionary trading. The first thing is that the best trading style depends on your personality. So for example, from my 7 years of trading, I've been trading for 7 years, I know that most beginners would be better off trading mechanical. The reason being is that you then get into the habit of following rules. You learn how to backtest, you learn edge, like you understand what edge is, and you develop that probabilistic mindset, which is so important when it comes to trading real capital. And if you trade discretionary, it's going to be a lot harder to develop that probabilistic mindset. At least it's going to take you longer. And I think as a beginner, if you trade something fully mechanical, you just follow the simple rules, you log your results, you backtest, you can make faster and better progress compared to trading discretionary from the beginning. I think discretionary trading and adding discretion to your trading is best for people with experience. And I think that's one of the reasons a lot of beginners fail is because they trade a discretionary method, which is based around experience, but they don't have the experience yet. And I think that's where it goes wrong. So discretion is more for experienced traders, in my opinion. If you've been watching a market for 5 years, you know all in all how it moves. You know why it moves a certain way. You know the volatility aspects. You know when they are volatile, when they're quiet. Then you can use that as your discretion for a strategy. But if you're completely new, you don't know all these things, you don't have the experience, and if you then completely, trade completely discretionary right off the bat, it's gonna be very difficult. That's what I found in my trading, but also a lot of people I've seen starting with discretionary trading and then realizing it's just really difficult to start with, and they would be better off with mechanical trading. For example, I wasted 2 years trading a style that didn't fit with me. I was trading discretionary in the beginning and I just couldn't make it work. Gray area here, gray area there. I always had some form of regret because I never knew, did I make the right decision, which you do have with mechanical trading. It took me 2 years to realize I was trading something that didn't fit with me as a person. I'm really a numbers guy. I like Excel sheets, the boring stuff. But that's just me as a person. And you need to figure it out as soon as possible, basically. So I hope this video is going to help you with that, because the sooner you realize which style of trading is going to fit you, the better, because otherwise you might waste months or years like I did. So to conclude, think about which trading style would fit you the most. Mechanical trading, discretionary trading. It doesn't mean you can only do one of those. It means that you start with one of those and then later on add things. So if you start fully mechanical and you have a system and you have some experience, then you might bend the rules sometimes and add some systematic discretion. So really think about it and focus on that style. Like I said in the beginning, or like I said in the previous slide, it might be better to start, if you've been struggling, it might be better to focus more on mechanical trading instead of discretionary trading, because discretionary trading does rely on experience, which you don't really have yet. I hope you learned a lot. Think about what trading style fits you. If you have any questions, if you have any feedback, comment down below, subscribe.